Going live. 3, 2, 1. I think I did it early.
Ten 17/2019, and we are here live on YouTube with our tackle trading halftime report. We've got Cody, Noah, and Tim, and welcome out to everybody out there who's joining us. Let's start with Noah. Noah, how are you doing today?
I am absolutely fantastic. Thrilled to be here as always.
Man, you nailed that Netflix short strangle. It was exactly the right play.
You know, I was kind of worried about it overnight when I watched it gap up overnight, but nope, it filled that gap and worked out like a champ.
You know, 10-point move, 3.7% gap on Netflix right now. Now, I know that it was up around that 310 mark on the overnight pricing. It looked like it wanted to run a little bit, but backfilling a little bit. This is the nature of it. Play the probability, play the right strategy, and learn how to think through this stuff critically. And you can usually find a very smart trade. That was one that was great. Cody, how are you doing today, though?
I'm doing well. I realized that if you accidentally hit enter, it'll send you live automatically and not give you the chance to set everything up correctly.
So you're kind of scrambling. See, I don't ever see any of that stuff. You're the one who does all the coordination on YouTube, and you do a great job, by the way. So you clicked a button, and it took us live before we wanted to?
Yep, about 5 seconds before I meant to go live, it took us live, but that's fine. I can correct after the fact.
No big deal.
I can always readjust. I can hedge and I can adjust our situation.
You know, it's not the first time I'll be caught staring blankly at a wall, though, so that's fine, Cody. No big deal. No big deal at all. You know, the thing about it is I want to start each and every day here with this week at least, the playbook, Noah, because I was watching the video that you put out explaining how to use it. I saw the daily email at Tackle Trading, and I know we talked about it yesterday, but this is a big deal for me, you know, and I think for our community, if you guys are out there and you're a pro member of Tackle Trading, you need to use the playbook. If you've already gone in and taken a look at it, let me know what you think, number one. If you're not a pro member, here is an obvious and very simple reason to go give yourself a trial right away. This is included in our pro membership at Tackle Trading. Noah, walk the team out there through the playbook, if you will.
So again, you start out at the Trade Center on the home page, and you click on the Tackle Trading Playbook, and that brings you to this landing page, this very pretty landing page. And you basically scroll down, and we've got 3 playbooks. We got the Delta Playbook, we got a Theta Playbook, and we got a Vega Playbook. Now, if you're familiar with options, you'll know what those mean. But if you're not familiar with options, the Delta Playbook is for directional trading. It's for picking prices that move up or down. For the Theta Playbook, that's for time decay. We make money on the passage of time by selling options premium, and those are cash flow strategies. And then we have a Volatility Playbook, which it takes advantage of market volatility cycles and can help you exploit those for profit. And the playbook is, I mean, it's so extremely well done, Tim. Just as I get into it, this is, you know, I'm as geeked out about this as you are.
Yeah.
Just because I've never seen anything quite like this, where you have a really, you know, just a really well organized playbook where it's giving you, like, you know, the categories, like, hey, this is, you know, this is a neutral strategy, this is a bullish strategy. Then it lays out all the rules for you. It has a little, you know, video. There's a PDF file, and then you know, it's just a wealth of knowledge, just a whole wealth, just a tremendous collection. And the videos are well done. It's very aesthetically pleasing, and it's just got the details that every trader wants.
Yeah, for sure. You know, and we've got a few people popping in here into our show live on a Thursday morning. And by the way, if you're a pro member, just type in pro member. Let me know who's out there, who's already using the playbook, has access to it, all that kind of stuff. And the thing about it is, Noah, you know, you mentioned Delta, Gamma, Theta, Vega. There was no Gamma in there, I guess. But we break those down for that reason, because that's the way we think of it as traders. It might not be the simplest way to explain something, but you know, we don't always choose the simplest way to explain things. It's okay to have some complexity in it. One of the things I love about options trading, quite frankly, is the complexity in there. And we did a Vega trade on Netflix yesterday. If somebody was interested in learning how to do a Vega trade, and they've never done one, they could come in here and find Short Strangle, watch the video, go through the rules, go through the design, and really understand how to apply what it is you're learning about in shows. I'm just fired up. Christian, if you're out there watching, great job on the visuals. Noah, great job on the video and the content. I know you and I and Tyler did the bulk of the video content on this. And, you know, I'm excited. I don't know if you picked up on that, Noah. Can you pick up on the fact that I'm geeked out about this?
I'm geeked out about it too, because and then, you know, it's just going to grow from here. You know, we'll be adding more plays to this as needed. And then we can expand on these concepts and go into greater depth in our coaches shows. And I mean, we've been doing the coaches shows on these topics. So we have, you know, not only the playbook, the rules and everything else, you can also go in and take a deep dive on all of these concepts.
Yeah. You know, at different stages of your trading, tackle trading can represent different types of value. When you're a new trader, you come in and you just got a team you can trust, you know, people that can help you, that are there for you to make sure we give you structure and content and routine and courses and all that kind of stuff. If you're an intermediate trader, we add stuff like this for the complexity, you know, so you can learn rules and back testing and design. We have the lounges and the shows to make sure you're applying it and actually building a good business as you go. And if you're a veteran, I mean, just having, maybe you've been trading 5 years, but you've never really done inverted flies. Boom, right there, inverted fly. You know, and you go and you watch the video, you learn it, you design it, you see how it can backfit into your business. I am so excited. And I am so happy about what our community is doing out there. It's pretty amazing. Hashtag Team Tackle in the chat, if you will. I'm going to keep talking about this, by the way. We'll bring it up tomorrow as well, so that if nobody saw the show today, we're going to keep pitching this one because it's one of my favorite things we've done in a long time. If you're out there watching right now, I've only got 4 thumbs up. Give me a thumbs up, you know, make it a habit. Come on into our show. Give me a quick thumbs up and let's rock and roll. Back into the markets here, Noah, and stock markets first. S&P, NASDAQ, Dow, and the Russell 2000. Just give me the technical read and then we'll talk about the news.
You bet. So start out with the S&P index. And what we're looking at today is very similar to yesterday. We got a little green candle rising. It's poked up above that big 3,000 level. That's a big number. And we have that overhead resistance that we've been talking about here around 30.25 or so. And that zone is going to be a pretty hard brick wall for the market to break through. Not that it can't, just that it's just a big threshold that has, you know, as the market's tested it in recent weeks, it's just had a hard time breaking through.
Yeah.
And it's you know, big reference point. If we do break that all-time high, I think that bolsters some confidence in the bulls. But in the meantime, you know, I'm kind of cautiously bullish to neutral because the market has been, you know, in that sideways channel for some time. And little rise there on the S&P. If we switch gears and look at the NASDAQ, a very similar story on the NASDAQ, but it's right there on that all-time high. It's just knocking on the door right now. It's a little bit closer to the breakout. And it's got a small body candle today. So very similar, not a lot of price action going on today, which means, you know, the theta strategy has been the go-to play from the playbook that we should be using right now, working on those cash flow plays.
Yeah.
And not as contingent on which way the market goes. But again, you know, the NASDAQ's knocking on the door and it's good. Give us a break out there. And then let's take a look at the Dow. Similar story, same song, you know, second verse type of thing. The S&P here, or excuse me, the Dow is a little bit further away from the resistance zone. It also has a small body candle today, and it's just nearing that all-time high. So, you know, I think this is a bit of a you go first. Everybody kind of plays wait and see a little bit when they get near those highs.
I didn't go first, by the way. You
go first.
You asked me to, and I'm like, oh no, I think I'm the old guy here. I'm going to wait. Yeah.
Patience is a virtue. Sometimes the best trade is to wait and let your time decay work on your other trades.
Yeah.
So not to say that we had some really good outcomes on our scouting report this week on stocks that did pop and stocks that did drop on the bullish and bearish picks.
Yep.
So lots of good stuff going on there.
Dude, there were some really, really good candidates. I mean, that's why we bird dog that stuff on the weekend. And Friday is one of my favorite days in my own personal life because I get on Friday afternoon to hang out with the coaches and talk about all those picks, you know, and we go through 150, 200 picks every week. And we end up whittling it down to about 20 on stocks and 20 on options with bull and bear. And one of those, plays on that was Celgene. I really like that breakout. I saw that thing running and moving, and there was a lot of different candidates that were popping out there. There's relative strength today in industrials, healthcare, and services. I don't know what that's going to mean for our rankings, but healthcare, I wish Matt was here to remind him that healthcare is bullish over the long term. We almost got into a little bit of a debate the other day. I don't know if you know this about me and my brother. We like to kind of spat a little bit back and forth. You ever pick up on that?
I hadn't noticed that. Never.
Yeah, I love him. He's down in LA teaching this weekend. I'm excited for him to be able to bring some new students into our community and whatnot. And he's just fired up. But yeah, we debate that one. After we got off the show the other day, he's like, really, healthcare, Tim? Healthcare? And I'm like, yeah, Matt, healthcare. So we'll have to have that fight on a podcast sometime. I'm looking at the broad markets, though. They're all pretty neutral at this resistance on the day over day. I don't know if the market would break out tomorrow, but I doubt it. I can't imagine stock investors wanting to run this thing to new highs into the weekend, Noah. Well, sometimes market psychology kind of works its way through that, right?
And I don't think that we have the economic news on the calendar anyway. Nothing on the calendar that I think is going to make it break through.
Mm-hmm. Yeah.
But you never know. I mean, that's one of those things where I personally wouldn't be opening up new trades into a new high on a Friday, but you never know what the news might bring.
We'll see what happens tomorrow, but the news of the day might actually be around Brexit. We don't usually go right from indexes into the pound dollar crosspair, but bring it up right now. In October of 2019, we might be finally moving towards a Brexit deal. Cody, you are my Forex guy, and we are almost ready to announce and release that Forex 101 sometime soon. Maybe this weekend. I think so. But Cody, what's going on with the pound dollar crosspair here?
So, two politicians via tweet, because I guess that's the way that politicians talk to the world these days. You had Boris Johnson, of course, the Prime Minister of Britain, and Jean-Claude Juncker, who is part of the EU, and they both came out via tweet and said that there's a deal that is going to be reached. So the negotiations that have been happening in Brussels looks like they are moving forward. Now, this isn't signed in hard and copy, because it might be written down between the UK and Brussels, but this still has to go through the House of Commons. You still have various people within the Union Party and the Labour Party that may not like this deal to its entirety. But the fact that the nation of Britain and the UK, or the EU, have actually agreed on something is a big step, and they've been pushing for that deadline of October 31st. The markets seem to like it, and not only have the markets liked it, but we've been hearing the rumors, and the charts been telling us that there's something in the works before we actually got this official announcement. Mm-hmm. You can see how the past week that thing's just been moving up and up and up. The chart's been telling us what's going on before we got the headline.
Yeah, it sure has, actually. And price action is king. The reality is I've been a stay away for anything related to the pound during all of this news. But quite frankly, I've not done much with the pound, but day traded for 3 years now. I cannot wait until Brexit is not a word I have to hear every day, Noah. It has been driving me nuts, the fact that this has dominated news headlines now for 3.5 years. Let's get a deal done here. Let's move forward. That would be my hope, right?
Well, someday. I don't know how long you'll not be hearing about Brexit. I mean, people are still going to want to know why mommy and daddy couldn't get along in the first place.
Well, there's history. I mean, talking about it in a historical context would be a welcome addition. But if I have to read another news headline on this one, oh my goodness, get it done, get it done, get it done. All right, back to the dollar. And by the way, the pound is the 4th or 5th largest currency by trade in the world when it comes to reserve currencies. And so it is a major one. It is one that you have to keep a track on. And it does have an impact on the value of the US dollar index. $ DXY down today.
Again, guys, it just comes right off that news. This is that.
It's a deep pullback, though, Cody.
It is. It's starting to really look bad. But as we looked yesterday, it's still in that channel on the weekly or even the monthly for it to look backwards. But that is an entire week of big moves downward. So don't be on the wrong side of this one, guys. Don't be trying to buy a bottom. Wait for some confirmation if you're looking to play this, because it could continue to run past that 200-day moving average if it really wanted to.
In the chat, type in the phrase top-down analysis. As we go through the markets each and every day, Noah, sometimes I'm sure a beginner might see us looking at the dollar and think, well, I don't trade currency. But if you're doing top-down analysis, it matters whatever the dollar's doing. If I'm going to invest in anything, Noah, I have to know where the currency markets are. Interest rate policy and the banking system, which is all based on dollar policy. It kind of is the top domino in an economic system that just kind of tips everything else over, right? So dollar down makes an impact on the way I think about gold, oil, other stocks, interest rates. What's your read here on the dollar, Noah?
Well, it just made me want to go look at gold the minute you said that, so I had to switch gears there. Dollar index, I think is, you're right. It's a lot of selling pressure. You're coming down into the big fat moving average. It really does change things. You got to remember everything's priced in dollars, right? I mean, your stocks are priced in dollars. The transactional price for other currencies or gold's priced in dollars. So as the dollar weakens again, it pulls down to the bottom of that channel. I don't expect it to, continue to drop. I do expect buyers to come in and buy at some point in time, but it starts with the dollar, in my opinion. That's kind of it is your currency.
Mm-hmm. Yeah, no doubt about it. This deep pullback also gives us an opportunity to teach multiple time frame analysis because the weekly looks fine. Yep. The daily is ugly, and we talked a little bit about this yesterday, but it's even further exacerbating it now that we're even having more volatility. That upward channel still intact. I'm not going to panic or anything. I mean, I would never panic. But the reality is you do have a deep pullback on the daily. Weekly still looking pretty good. Would you agree with that?
Yeah, absolutely. I think it looks great. I think that 200 period moving average is going to be a force to be reckoned with for it. Plus the support resistance zone is a zip code. It's not just an exact price. It's that whole zone in there. And there's a lot of support in that 98 to 97 zip code.
Sure. Yeah.
One other thing this has actually been very easy to teach from is go intraday for me, maybe like an hourly chart. And of course, I talked about this more on the Forex 101, but your movements that you see in currencies happen when the banks open. So it's very clear to see when that's not an hourly.
That did not right. I thought I picked 20 days, 1 hour. There we go. All right.
That you could see most of those movements happen when the banks open, and then it was kind of sideways, and the bank would open, it was kind of sideways. And it's just very interesting to see that those movements all happen within a very short time frame, and then you're done. Mm-hmm. You don't actually have to stare at the screen all day. You can take your trade in 2 hours, take your profit, walk away, be done for the day. Go do something else.
Yeah, that's one approach I love in the Forex markets is it does work across different time frames, no doubt about it. Let's look at commodities real quick here. Give me a read on oil. Now, Cody, futures options expiring here today. And we've been talking about this one. You've got that 49-48 spread down there. I've got the 46 spread, so we've got some cushion here, but, support held, so far, unless something real radical happened here within the next little bit. But what lessons do you think we can learn from that support holding and the overall approach to trading with probability?
Supports are strong. They're going to hold until they don't. And
right.
that sounds like a redundant statement, but it's true. The 50 around that 50 area has always been a strong support for oil. And when it does break, there's not much time. Even when you look back at the end of the year, there's not much time that oil likes staying below $50. And that is a big, strong support. Other thing that we can learn from it is when it starts something moving down towards your support is that if you sold something in the futures market and you sold options, the brokers starts requiring more margin. So you have to make sure you're correctly pricing your trade. Otherwise, you're going to start getting margin called on it. If you have enough margin in the portfolio, they're just going to start taking up a little bit more and it shouldn't affect you. But if you over leverage yourself, then it's going to get to the point where they're going to say, hey, you either close your trade or send us more money.
Yep.
You got to make sure you look out for that too. Those are the things that this is really shown. Because I first sold mine right around 57.50, back when it had that base kind of holding after the gap up. That's when I sold down below 50. So as it ran towards that, it was they were, taking up more margin in my account, more margin in my account, more margin in my account. It was just like, man, sure glad that I understand what's going on here, because otherwise it could have been a scary moment.
Yeah, and they do increase the margin requirement on futures, especially because they know what that risk really entails, right? I mean, if it did move in the money, you're on the hook for something there, which is why I like spreads, and that's why in the playbook you should go read the difference between a naked put and a spread, a bull put spread, and they do have some structural differences. One of them is limited risk and limited cost. Noah, futures a little different animal. Obviously, that's a pro trader's realm. It's not something I think anybody should do. By the way, I don't think anybody should do any strategy until you prove that you're good enough to make money at it. So I, caught myself even saying something there, but futures options are not for a beginner. I would agree with that 100%.
Yep, absolutely.
Yeah, gold and silver are popping just a little bit. Palladium up at a profit-taking zone. Give me a quick look at palladium. I was looking at this one this morning, and I'm thinking, do I trail stop or do I take profit? Your range up, you're overstretched, you've had a good run. The dollar is way down. Palladium has caught a huge move. Noah, I'm sitting here watching a situation where that would be a debate for me. What are you reading?
Well, I get every sell signal going off in my head. That's a nice little sell signal up there. You got, again, range up, just like you described. You got a smaller inside candle. If you break that down into an intraday time frame here, you can see, look, there's a forming little head and shoulders up there on that hourly time frame. And so if it breaks that 1720 zone, you're violating the little upward trend it's established, and you'll see some profit taking. I think one of the reasons that markets do pull back on profits is people trail stops. Whoops, just like you were explaining, trailing that stop's a good idea. And as people trail stops up underneath those candlesticks, well, once the selling pressure hits, it'll trigger all this trailing stops, and you'll get a 3 to 4 day sell off. So, that's the idea behind that. After a nice run, take the money and run.
Quick peek at Bitcoin. It has found its price in the short term, which is $8,000 for one coin relative to the US dollar. Fading downtrend here over the last 4 or 5 months, Noah, since June, really, when it popped up and hit that 14 or 13.9 mark. Now we're down at 8,000, holding support. But man, if support breaks, you got to look out below, don't you think?
I think so. I think if it breaks 8,000, 7,000 is the next stop on that train. So, I mean, it's definitely testing that. And I think that's got that downward pressure look, that low base pattern look to it.
Yeah. I would agree with that. Let's look at some companies in the news. We did mention Netflix earlier. I want to bring that one up. Better than feared third quarter report was the headline I saw. It's always, I guess, a glass is half full kind of attitude. The numbers weren't great compared to year over year and whatnot, but they were better than what they thought they would be. They were expecting some bad numbers. Good lesson in earnings expectations, Noah. You can come out and put out a bad report, but if it's better than what the market thought, then it can jump up a little bit.
Yep, absolutely. So, and again, I watched that trade overnight, and there's quite a bit of exuberance overnight as it shot up. And so I saw that up there, overnight, trading up above 310, 315. That went beyond the market maker's move in the after hours price action, but then it came right back down into that gap.
IBM is trading 6% down in the morning. Let's get an update on where it's at here midday. Obviously a big player, big international business machines. It's been a bad company for a long time, quite frankly. The fact that it's held up as well as it has is pretty impressive relative to the fundamentals it has against other industry counterparts. But gapping down here on earnings, going to be fading into that support point here pretty quick. I don't see much here. It's a dividend player. It's a neutral company. I wouldn't get excited about shorting or even trying to buy that gap here, Noah. But notable company to report on earnings. You see anything in the chart?
Just a few dollars in profit from the short strangle.
Yeah. Nice.
Yeah. So that worked out okay. From the chart, no, I mean, it's pretty sideways. And again, this is more of a dividend player, like you said. Could be good for cash flow, things like credit spreads.
One of my favorite companies, just from a history perspective, Union Pacific, UNP. Downtown Salt Lake City, one of the most cool things down there is actually the old railroad station, Noah, and UNP was a big part of our history here in Utah and the country's history. Stock here fading for about 3 or 4 or 5 months. Bear retracement back in the 200 period moving average. Earnings are now come and gone. They missed on EPS numbers. I'm looking at the results, though. They were up just a hair. This one's interesting to me because if I saw something from here, price action to the downside, maybe like a break back down, I actually could see an argument for a downside play.
Oh yeah, you're kind of in that kiss goodbye zone where you see it has established lower lows and lower highs. The price has violated all those moving averages to the downside. And you get this rally back up into that old support resistance zone. And this old support resistance zone up here, that really does create that kiss goodbye scenario for us. So just got to keep an eye on that one. And I would like to see, bearish signal candles to set that up better.
Yeah.
But yeah, I totally see what you're seeing in that chart.
Yeah, for sure. Give me a weekly chart, if you will. I got to take a peek at this one real quick. Yeah, weekly, not as ugly, obviously. So it might just be a shorter term trading opportunity. Okay. All right. Say la vie is what it is. Still got to wait on price action anyway. We've got upcoming news on earnings, E-Trade, BB&T, M&T, Bank, Morgan Stanley, SunTrust. But we'll break that all down tomorrow. The reality is here, guys, Thursday, the markets are kind of flat. And you've got your earnings plays. It reminds me of a lesson I could teach everybody out there, Noah. I do all my daily routine in the morning. I do it the same way every day. I wake up early and I'm a morning guy, market bell, ding, 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 ding. I'm done by 8. I do all my Vega trading about this time every day. In fact, I usually don't prep any volatility or earnings plays until after the halftime show, just kind of the way I run my day. If you've got good systems, you can theta trade, you can Vega trade, you can delta trade, and you can apply those plays to different market conditions as they're evolving. Right now in the market, I think you've got a lot of theta, availability, and I think you got a lot of Vega availability with the earnings. What's your assessment right now?
Well, I think that theta plays are probably going to be your most consistent outcomes right now. And again, with earnings season, I always get excited about Vega plays, but I'm kind of an opportunity. I have my go-to list of those Vega trades. Mm-hmm. So, I keep an eye on those, and just as they approach earnings, and that's, stocks that I've studied and tested and traded in the past. So got a good, track record for that. But I do expect more volatility coming out of the market as we're going through earnings. And I think which way the market ultimately ends up moving directionally kind of comes down to how well the company's reports are coming out collectively.
Yeah, I would agree with that. From now until the end of the week, I think if there's one company I'm going to be most interested in, E-Trade's earnings are going to be important to me. Those brokers have been big. ETFC's coming up Thursday after the bell. So tonight, this is one I'm going to watch close. I trade the brokers. I like the brokers. They've been in downtrends. They've been under pressure. And that big news recently, who knows how it's going to impact them. Obviously it's not going to affect short-term corporate profits, but what these CEOs say and what the messaging says might actually create some really good opportunities here. All right.
That is a beautiful looking chart if it wasn't for earnings.
I know. Isn't that how it works sometimes? Yeah.
I know.
All right. Relationship Thursday, Cody. One thing about relationships is you got to have clear expectations, right? So set up our game, let our audience know what we're looking for and how we can kind of have some fun here.
Okay. Well, this is a time for any of you guys that if you have a trade out there or a company out there that you've just been struggling with, seems like company may not be treating you right. Maybe the trade's going against you. You're not sure if you should have exited already. You're down. You're not sure what's going on. If you have anything like that, then bring it up. We're going to take our time, kind of work through and talk about whether or not you should be, continuing through with this particular trade, continuing through with this particular company, or if you've just been abused a little bit too much and it's time for you to find a different trade, to go find someone else that's going to treat you a little bit better.
So you put a stock in a symbol in the chat. Is that right?
Yep. So guys, put some symbols in the chat for some stocks that you want us to basically talk through. This is all bullishly. So we're looking at this as bullish type trades of what you should do, maybe some cash flow, maybe cover calls that's been going down, but we'll just talk through as to how we should have approached or continue to approach these companies. Looks like our first ones are coming in. We have Noah, you can't put in your own.
What do you mean I can't put in my own?
If I'm going to put one in for myself, it would be GE. I might need to talk about it. I might need a Father Stoccaducci session on that one as well. But J&J, Noah, we'll bring this one up. You popped it in. What are you thinking here?
Well, I put J&J in because I know it's been one on a lot of our students' radar, and it's had a pretty nice little rally. And from what I understand, they've managed to get rid of the risk on that talcum powder lawsuit. And again, it's just range bound dividend payer, J&J.
Should you divorce J&J? I think that you had some rough times, but I've actually always been happy with J&J. And I even said it with the lawsuits that came out. I was like, I think they're a little overblown headline.
Give me a long-term chart. Give me a long-term chart, Cody. Hold on. Because I don't know if
you want to see
like years and weekly candles or monthly candles. If you're in a relationship with J&J, you've been married a long time. You're not going anywhere. So, I mean, look at that chart over the course of, 20 years?
20 years.
Well, and that's what I'm saying is that just because lawsuits and things have come out to make things rough, it's like, yeah, if you've been in a relationship with J&J this long.
Hey, I'll tell you one thing I don't see on the chart of J&J. Massive drawdowns. I mean, you see corrections, but look at how it fared in 2000. I've got not max data here. Let me see if I can get max data. Let's see if it goes all the way to max available. You go back and you look at even how it behaved during the .com crash. Didn't get that beat up. How it behaved in the 2008 crash. I mean, it went down, but 40%.
But still, it's a good point.
But that chart looks nothing like a lot of the other high flyers during that time where they saw 50, 60% corrections. And again, over time, this thing just continues to march on. They pay a healthy dividend. They've got a good, as far as drug companies, go, they've got probably one of the widest portfolios out there. So they're not a lot of risk in any. Yep. It's cool.
I also think in addition to being a drug company.
Stay there. No, hold on. Don't change the chart. I want to see the big picture again. I got a point. Cody, go ahead though.
In addition to being a drug company, we think of them as a drug company, but they also have some consumer staples in their repertoire, things that they sell, those things that similar to like what Procter & Gamble would sell. So we have to remember that this is a drug company with some consumer staples that are also in its tool belt. Mm-hmm. So it's not going to take a huge drawdown just because one facet of the entire company is taking a hit.
100% agree on that point as well. And I think it kind of will even reiterate the point I'm going to make right now. Noah, I think one area where investors and new traders struggle is they mix the concepts of trading and investing into all their accounts all the time.
Yes, absolutely. Right? Well, this is something I personally have done in my own trading, in my own life over the years. If I had a time machine and I can go back and talk to my younger self, I would encourage myself to also do longer term investing alongside the, short term instant gratification type trading.
Yes. 100%. I mean, think about it like this, guys. In my opinion, the way that you should think about investing is like banking on steroids. You should not be using your retirement accounts with short-term aggressive strategies. Your retirement account model should be based on trying to beat the market, trying to beat savings rates, trying to beat the bond market, not just take 3 or 4%, beat inflation as well, and go out there and actually achieve some great things. If you do 10, 15, 20% a year and the market only did 5%, you did a great job. You did an amazing job. If you look at J&J after the crash, now from tip to tip, after the crash in 2009, we dropped down to about $50 a share, 46, right? Mm-hmm. It tripled, Noah. I know we're only at 137 right now, but from 46 to now, it's gone up 300%. And we're talking about Johnson & Johnson. We're not talking about trying to pick some new age company that's never proven themselves. These guys make products that everybody has to use, Cody. So even in a defensive type company that pays you a dividend, I've even talked about the dividend, by the way, that's just price appreciation. You also get about $4 a share every year.
Think about it this way, Tim. If you had been savvy enough to buy it at $50 a share, $40 a share back when it crashed, and now you're collecting a 95-cent dividend on that.
Yeah.
If your cost base, is where it was, and that dividend goes over time. So again, if you average in and you sell naked puts to buy it, you do the covered calls on it, you hold it longer term, you buy protected puts when needed. That dividend, that's just going to help you compound those gains over time.
Back again. We're not moving on from this one. There's so many good points here. Think about it like this, Noah. You got 10 grand. Not trading money. Your trading account's different. You do short strangles, you do theta, you do spreads, you do Forex. There's all kinds of plays in your trading account. But if you put 10 grand in, not even trying to time the tip of the market, but when it broke out from those highs at like 70, what was that, 2012?
Yeah, about 2000. Yeah, 2000.
It was hitting an all-time high. It would have been an easy technical read. The market was bullish. Okay. It would not been that complex of an investment to make. If you put 10 grand in at 70, it's now worth 20 grand basically on price appreciation. Okay. But year over year, you also make $400 to $500 on the shares, 4 or 5% on the dividend, Cody. And we're not talking margin or anything, you know, over the course of a 7-year window. So you pick up $10,000 in investment return, but you also get another like $2,500 to $3,000 in dividends, Noah. So Relationship Thursday, she's treated you good here.
That's a slow and steady win. That is a get rich slowly concept right there.
I love it. In the chat here, guys, just type in get rich slow. It's a mindset we've been talking about lately. You know, you trade for profit on a day-by-day basis, whether you're a day trader, a Forex trader, a futures trader, volatility options, you name it. That's one thing. But you should have different mindsets and different approaches in your investing account, which we call retirement accounts, relative to your trading account. Good one on JNJ, Noah.
Let's go to UNG.
Let's do it. I'll take this one. I've had a relationship with this one for a long time. By the way, that's pre-split. So that stuff back in 2008, it was not a $2,000 product. They had to inverse split here.
They did not adjust that chart back.
No, they don't always do that. I'm interested to try to work the relationship out here. There's no question about it. You know, you're going to counseling. You know, you're talking, you're communicating, you acknowledge there are still structural problems in the way that you're dealing with each other, you and UNG, me and UNG, I should say. But I know that we've had good times in the past, Cody, and I know it's got stability. I know that it's got some things here that can bring us back to the glory times again. So I'm willing to work this one out and keep working on the relationship.
And I think with UNG, most of the strategies are going to be some of those cash flow type boomerang strategies anyways. So as long as UNG is still taking care of you and paying those bills, that monthly cash flow is coming in, then I think you can stay with UNG.
Yep. Shopify. This is a little trickier one here.
Ooh.
You know.
Possible.
So here's the thing. Scoot this one and just
pattern forming.
So you got married last year. The honeymoon phase is now over, Cody. Okay.
She really let herself go.
We've had a bad stretch here the last few months. We're starting to see some habits that we weren't aware of, right? That first year of a new relationship, Noah, things are always on point. But now life is settling in. Now you got to make a decision. Am I in this for the long term? Am I willing to deal with some short-term volatility and some of the not so good things, or do we move on? Noah, what's your take?
Well, you know, I like the company itself. I've looked at the fundamentals. They're not bad. I think they have a very interesting product and, you know, a new economy, and they've got their earnings, you know, coming out. So that'll give us new information to work with. But pattern wise, I can see a potential head and shoulders type reversal forming, like Cody was talking about here. Like, oh, maybe I see a reversal there. And maybe we do. You know, if you look at it like, you know, right here, let's see if I can draw that up. Here's the head and shoulders kind of, it hasn't formed yet. And it wouldn't be a violation until it breaks down below that 300 zone. In the meantime, from the daily chart, you know, it is reestablishing a little upward trend that for some might look like the bear flag. But, you know, if it gets one more rally up and it starts taking out the 350 moving average there, that 50 period moving average up at $350, that changes the entire outlook. So
we're aware of some of the short-term kind of volatility and risk, and we'll kind of deal with it day by day as it develops. But if we're in a long-term relationship, it's treated us well for a long time. You know, it's actually done really well this year. It's just down in the short term. We fix those problems, Cody. We manage the risk there, but I think we're sticking with this one, right?
Well,
I think we stick with it. I think we would just adjust or hedge and realize that, you know, times might be bad now, but things will get better.
So is a protective put option like a prenup?
Yes.
No, it's not, because it's a post-nup. It's a prenup.
Post-nup, okay.
Yeah.
Post-nup, okay.
You can add that in at any time. That's awesome. Oh gosh.
Good.
Dang it.
That's like getting a good attorney, I guess.
That's right. GDX. Next one here. The gold miners. You know, if you or if you're in a long-term relationship with gold mining companies, you kind of like a little razzle dazzle. You know, you don't want slow and steady every day. You want slow and steady over the course of years, but you know you're going to get some wildness, Noah. You know, you're going to get some craziness from this index. There's no question about it. I can't imagine somebody who loves gold moving away from gold for almost any reason here. Now, the chart's not great on the daily, but when we're thinking big picture, if you're still a gold mining fan, you're probably going to still play gold miners, right?
I think so. I mean, I think, that as the demand for gold stays high, gold miners do well. And again, it's the chart itself. I think you can argue it both ways from a technical standpoint, but I think from a fundamental economic standpoint, I don't know. They keep devaluing currencies, see negative rates growing across the world, lowering interest rates. I just see the demand for gold staying high.
Yeah. Silver. Perfect timing, Mark. We're giving relationship advice here from a long-term perspective. It's marriage counseling, whatever you want to call it.
Since I can't hold a relationship, and I've probably had more relationships than everyone at Tackle Trading combined, I'm probably not the best person to give advice.
Perfect person. I mean, listen, if you have the most experience, even if
I have the most failure,
that's okay.
It's fine.
Mark, you're
forward.
suggesting that you can't learn from those failures,
Well, I see.
Best of all, learn from other people's mistakes.
It's like somebody keeps saying you need to have a stop loss, and I don't listen.
It's true.
Well, did you catch our little, protective puts like a prenup or a postnup?
I did not. I just joined 30 seconds ago.
Oh, silver. I mean, here's the thing about silver. I'd be concerned in the short term. If you have a relationship with silver, it can go through stretches like this. In fact, it can go through years where it's not bursting out and hitting home runs and all that kind of stuff. But if you own silver, you're owning it and you're in that relationship for a different reason, most likely. Probably cash flow on the long term, some kind of hedge against currency risk or whatever it might be. I don't think there's much else there. GE, I popped that one in there. Give me a quick look at this one. Divorce. Moving on. Verizon. No. GE, listen, I'll be open here, okay? I'm complaining about GE for years. I realize
you're not in a relationship with GE.
Oh, I do. I have a bias, but I have a bias. This is my divorce, right?
It's not a relationship if you don't want to go out with her.
But it's my ex, and maybe we got a kid together. We got to deal with each other.
This is his ex that he can't stop complaining about.
Yes, like, that is the perfect analogy. It's like, come on, move on, bro.
No, maybe I need to find a healthy.
Living well is the best revenge. Just go find a better.
There's lots of GEs in the pond.
Moving on. Move on. All right, Verizon. There we go. I think that's probably good advice. Verizon relationship advice. Noah.
Well, Verizon, this is one of those things where I always talk about, look, this is my cell phone provider. I send them money every month. Shouldn't I be getting some of that money back? Shouldn't I be collecting that dividend? Shouldn't I be holding that stock, cash flowing it? I think this is an awesome cash flow candidate. It's a $60 stock and it's got a 1% dividend per quarter. That's 4% a year. You write some covered calls on that and you're beating the S&P's average over the last 100 years. This is for sure a sound relationship.
I love this new concept we've done here with relationship, because not everything we do is trading. We do trading and then we do investing. We do both, Mark. There's no doubt about it. I'm going to give you a couple more here and then we're going to be done here in a couple minutes. I think we got 4 more if I'm counting right. Mark, you've got to take this one, Activision. Now.
Well, listen. For those individuals that do not know, a lot of us play a game that is produced by Activision, but we didn't play that game a couple months ago. They released a new game. So I'm in a long-term relationship with, can I take Activision to the movies and eat popcorn with it?
Yes, you can. Yes, you can. You could, by the way, you've only been in this new relationship for 2 months and now you're already projecting a long-term relationship.
Yeah, well,
tells you things are going well.
You get excited.
That's a new trend.
You get excited when there's a new relationship. You don't see all the problems Everything is wonderful.
Right. You've introduced her to your family, your friends. You know, you brought her around family dinner. Things are going well here, Cody. The trend is now moving in the right direction. It's got prospects, you know.
Okay. You're at short-term resistance from a technical standpoint. There's some things that are turning around on to Activision from both a fundamental and a technical perspective. But when we get in these long-term relationships, boy, that was a nice channel, like nice floor later on. I have a bias and I have a problem. And this is one of, we all have these things that keep us from being the best traders and investors we can be.
Mm-hmm.
If I don't add something when there was a golden opportunity to previously, I have a hard time pulling the trigger from an investing point of view. It's like I could have got it cheaper. There were a million opportunities to. We're now 10, 20% higher. I have a problem with that,
I get it. I get it. But if you break out, I understand that, but if you break out, that's a good signal. I mean, that's your own.
Well, that's a great trading signal.
Yeah.
I still don't know if I love the fundamentals of buying Activision long-term at 60 from a trading standpoint. You can trade anything.
I gotcha. Yeah. Delta Airlines, Cody, airline stock relationship advice here.
Airlines are something that you have to be holding because you want to hold them for the investment, for the dividend, for the cash flow, because airlines, you look at this chart, they're just really choppy. They don't really pick a direction. They're more neutral with that choppiness, that volatility. This is a crazy relationship that you're in, but you stay in it if you love them. And what I mean by that is you love the dividend, you love the cash flow, because I don't see Delta anytime soon just, turning into a strong bullish trend and running up to 150 like J&J did.
Mm-hmm.
I don't see that happening with an airline. But if you're willing to pick this up at one of these lower points and hang on to it for its dividend, I'm okay with it. But you have to understand the craziness of this relationship. This is the girl that will make you a nice dinner, and the next meal you accidentally said something wrong and she destroys your car with a hammer or something. This is a crazy relationship.
She's Carrie Underwood.
Yes.
I like it.
I knew I was having problems with my ex-wife. Remember that Carrie Underwood car where she keys the guy's car and she does all of the,
before he cheats is what it's called.
Yeah. Like my ex-wife was like, yeah,
John Carter
big fan.
Made a trading version of that. Did you guys ever see that?
He did, didn't he?
I remember this.
Before he trades, like he'll think next time before he trades. He's
so
trading
funny.
without a stop loss. Like, I mean, it was good.
I do remember that.
Be careful. There are consequences to your actions. There's no doubt.
Hey, really
Last
quickly,
one.
Tim, I want to point something out before we move to the next one. Luis, I think the past 3 weeks you have asked us to give you our opinion on pre-IPO night scope. We don't advise on pre-IPOs or IPOs. We say wait for data to come out.
Correction. We don't give financial advice on anything.
That's true.
But we will analyze anything. We just don't at tackle trading. We don't play IPOs, Mark. We just don't. No. It's not a part of how we approach the markets. And I was showing my class last week. We've done this in the halftime report before. Maybe tomorrow, Cody. That would be a good question for the mailbag. Maybe tomorrow. The IPO one. And we can go look at all the charts on like FinBiz of all the companies who IPO'd in the last year. No, almost all of them are down. Given a long enough timeline.
How do you not want a potential? I mean, looking at this chart, expanding on chart, how do you not get excited about perhaps asking Delta out? Starting a courtship. I mean, look at that support level. Delta's earnings last quarter were really, really solid, as were the rest of the airlines.
Maybe if you're looking for some long-term stability from somebody who is going to get paid. They've got their own income. You've got your own income.
I get excited more at tackle. That support level. I mean, how do you not like buying blue chips at support?
Well, that's the whole point with Activision. This is in your wheelhouse. I would not touch it. That's a different style of investing, right? You love buying dividend companies when they're at support on a long-term chart for investments, which is smart. I usually wait for a little confirmation to start moving back up. Pivot, maybe even a couple months. For me, Delta, I'm going to wait to see how they handle the holiday season here, and then maybe next year, Cody, I'll pop in and ask him on a date. I can't imagine a chart pattern in the short term that's going to get me interested.
Oh, see that it's we all have our own thing. That thing's starting to scream boomerang to me.
Last one, AT&T. If we missed one, apologies, but we missed some. That's the way it works. If you are in a
I'll tell you what.
relationship with AT&T, Noah, what?
AT&T is Verizon's slightly better looking and more intelligent sister.
Yes.
I mean, here's the thing about the difference. Like, you get excited now, but look at the support level it formed throughout the early start of the year. Like, I mean, this is the difference, like, between trading, I believe, and cash flow investing on stocks. Looking for blue chips when they are forming that bottoming pattern. I mean, you're getting it 22% cheaper at the earlier in the year by identifying and getting good at identifying those bottoming patterns. Like, you're near like resistance levels now, and your dividend isn't nearly as sexy now.
Yeah.
Once again, I'm not talking trading. I'm talking cash flow long-term investing.
Check out that 51-cent dividend on a $37 stock.
Dude, it's $2 a year. $2 a year you get on 40
I know,
bucks.
and that's what I was
5%.
listen, in the lounge I was screaming AT&T earlier this year, and when it was bottoming out during different parts last year. That was still a $2 dividend when it was a $30 stock, when it was a $28 stock.
I love dividend companies. I just
they weather the storm so much better because they are grounded in fundamental strength. I mean, they're not like a company that's doing crazy stuff. They're not just a crazy growth company. I mean, they're practically a utility.
They've got their stuff
absolutely
together.
100%.
Right.
They're practically a utility.
That's right. I love AT&T. You know, and it goes back to a concept we've talked about banking. Back on a 20-year weekly for 1 second, and then we're wrapping. But guys, I mean, investing is like, and Mark, I used this phrase earlier. You tell me if you like it. Investing is like banking on steroids. You're not supposed to be moving your money in and out every 2 days in your long-term investing account. You're trying to get returns over the course of year over year over year. So instead of savings at 1%, maybe a dividend at 5%, right? Something like that. It's a different mindset. AT&T over the course of 10 years, your money in a savings account makes you 1% a year. Inflation's 3% a year. But yet AT&T pays a 5% dividend. It's a chart that's boring. If you look at the long term, it's not like it's gone up 300%, but that's where dividends from a long-term investing standpoint are so powerful. It's not supposed to go up to $100 a share. It's going to hang around, pay you the dividend. Nice, good investment. Mark, thoughts?
Well, and if you look at it, and just another random thought, I mean, you know, a 30-day covered call out of the money with a low delta is going to pay you another 1%.
Absolutely.
Well, I saw Mark roll his eyes when I said it, banking on steroids. I don't know if he liked it or not. Did it work?
Did I really roll my eyes?
A little bit. You
I
like
heard
thought about it. I can see it.
I don't think I roll my eyes. I don't think that is a like.
I think he gave a pondered look of let's see where Tim's going with this before I decide if I like the metaphor or not.
Get rich slowly. Listen, that's my favorite saying of the year. I don't know if banking on steroids is going to stick around.
All right. So we'll see where it sticks, guys. Thanks for being here.
Beyond banking.
Oh, you are. See now that one I like.
Oh goodness! All right.
Noah's sense of humor is just
on point. Look at the mustache. What are you talking?
I don't know if there is another human being other than maybe Dave Chappelle that has made me laugh as much as Noah Davidson.
100%.
I take that as a compliment because Dave.
Oh, you are always. Your sense of humor just does something for me.
He's always.
Noah, if I swung that way, I would start asking you out. So.
Hey, well, you know, I'm open-minded, so we'll keep that.
Trading rules. Now, I know this is probably not the most PC thing, but I think it's funny. I'm going to read it. He says, trading rules says, no relationships here. I rather to wham, bam, thank you, ma'am, to all the stocks that I trade. So there's no scratches on my bends.
See, the problem with that, though.
You're going to die alone and lonely.
That is a trader.
That is a day trader. That's a day scalper. Trader. That is a day trader's mentality.
Oh, I love it. Too funny. All right, guys, we are done here. Fun show today. Programming notes, Mark. Yeah, don't let me forget.
Couple last things. One thing, you know, there's a lot of different ways to approach the market. There's short-term investing. There's cash flow investing. There's short-term trading. There's all of that. Tonight on the Cash Flow Club, Noah, you're hosting tonight. Yeah. I know you've done a lot of shows and you're an excellent teacher. And so students have really benefited from your knowledge. What are you covering on the Cash Flow Club tonight?
Well, we're going to be talking a little bit about the playbook and actually going and using it. And we're going to take our Tackle 25 stocks and we're going to go in and actually look at how to apply the playbook. So it's really going to be a show and tell on how to utilize the playbook and kind of a recap. What we've been doing in the coaches show for the last month has been, last several months have been all the playbook strategies. So we're just going to be, putting in a little dynamic treatment on that.
Yeah.
And then on Saturday, I am hosting a live Mind of the Trader / Commodities report where we're going to talk about a critical aspect of the boomerang trade. I started writing an article last week on the boomerang trade for the commodities. I'm doing 2 series, one on the boomerang trade, one on portfolio protection, kind of going back and forth. But I got 2,000 words into that article, Tim, and I was like, this is going to take another 4,000 or 5,000 words. And so I was like, let's just hold a live show on Saturday to go over these concepts. We're going to talk about the management of in the money puts. Saturday, noon Eastern. It's there on the tackle trading calendar. And your oil put, see, Tim, this is in honor of you. So that when you eventually have an oil put go in the money,
I'll know. That's right.
You don't freak out. You'll have clear-cut rules because eventually it happens.
Well, and I love the write-up you started there. And I think the live show on Saturday is an incredible value. And, my job here, guys, as the host of the show and kind of as one of the coaches, tackle trading, just come in here and drive the show. Cody and I were here every day. Noah's here most days. Mark's here most days. We have a lot of fun. But we also have another job here, which is to promote our company and also promote our pro membership, Mark. We are selling that. That is part of what we do here with a live show on YouTube, is to show how good we are at what we do. And we're all confident in that, by the way. And we know the kind of work and quality we do, but also the value of what we bring in the pro membership. I mean, just think about the 2 things. And this is just 2 things that we're going to be doing the next 3 days. A live show on how to do the boomerang trade on commodities on Saturday with Coach Mark, and a live show tonight with Noah on how to use the playbook. And the pro membership is $97 a month, Noah. Yep. I think it's a pretty easy call. If you want to be a trader, you sign up for a pro. Cody, drop that link in the chat if you will. It's not a debate. I mean, if you want to do this, put some time, put some energy, and put some money into your education, because you got to get trained, and if you're out there and you've been looking at different trading companies, or if you know what the industry is all about and you're like, well, I don't know which one I should go with, you've found the right team. There's no question about it. And Mark, here's the thing. They can try it out for free. That's why we've designed that trial the way it is. How do they set up a trial, Mark?
You go to the store page on Tackle Trading that, or you can always email me. And I have a tendency to give a few more days away if you email me at Tackle Trading. Just say, Mark, hey, hook me up. And I usually do 99.9% of the time.
Yep. Oh my, I hear my dogs wailing. By the way, if anybody out there has advice for me on these 2 dogs, I've got an old grumpy dog who does not like my puppy, Noah. He went after him the other day.
Oh,
and, yeah.
Which one of your dogs?
Max.
Max went after Freddie, did he?
Yeah, well, he kind of, Freddie's going up to Max and jumping at him. And Freddie's this little dachshund. He's a happy, sweet little dog. He's only 2 or 3 months old. Max is 12, 13 years old, and he's got bad hips, and he's not happy. And so he just nipped right at him, Noah.
Well, yeah, my little dogs nip at my toddler all the time. So
listen, when you're an
good
old
thing
dog,
they have no teeth.
When you're an old dog, you just want to be left the F alone, and just be like, stop nipping at me.
Do I let them work it out with each other, or do I keep them separated?
Once again, I'm the worst person for relationship advice. So.
Yeah, I need a dog expert here. There's no doubt about it.
I would say something off the cuff, but this is a big deal. I mean,
it's a big deal to me and
people
my family.
that have pets like us, Noah, Cody, do you guys have any pets?
Oh yeah.
Yep.
Yeah, when you got pets are part of your family.
Yeah.
Pets are part of your family. So
yeah, if you are a dog expert, buzz me a message. I'd love to hear what your thoughts are. I'm going to actually get some input on this, because I can't decide if I keep them separated, because I don't want the little dog getting hurt, Mark. There's no doubt about it.
Of course not.
Or if I'm supposed to let them socialize, if there's a way to actually get them more acquainted with each other. I need a mentor here, Noah, is what I need. But that's all for another time. We are done here today. We're out. We'll see you tomorrow.